Today's educational webinar is on investing in private equity with your retirement funds. My name is Corey Daharsh. I've been with Advanta IRA since 2016. I've served about 5 years as a client account manager, managing day-to-day transactions for clients and answering their questions about rules and regulations and how to appropriately self-direct their accounts. And then about 3 years ago, I switched over to the business development team where I now work to do educational content network where I'm locally at, which is Western North Carolina, Eastern Tennessee, some parts of South Carolina and Virginia. We do have a nationwide presence. We have an office in Atlanta and an office in Largo, Florida, but we can really assist clients throughout the country just based on emails, phone calls, Zoom sessions, things like that. So even international, actually, we've got international clients that are US based and have US retirement accounts, but maybe living overseas or in South America, wherever they may choose to reside. Again, with the disclaimer, I'm not able to provide any tax advice, legal advice, or financial advice, both myself as an individual and Advanta IRA as a self-directed administrator. So we always implore you to do your own due diligence and consult with your own team of attorneys, accountants, financial advisors before you enter any investment. If you need help finding the right attorney or an accountant that is familiar with self-directed investing, we do have referral partners we could provide you. It would be up to you once we make the referral to decide if that person's a good fit or their office is a good fit for your strategies, your goals, and your style of working. Advanta IRA has been in the self-directed industry for 21 years now. We do have a client base that holds about 2.7 billion in assets under management through us, and we do expect that number to grow to over 3 billion by the end of this calendar year. So a lot of growth, and that's really in part just by our clients finding the right investments, finding the right strategies, and building their own generational wealth and retirement wealth. As I mentioned earlier, we pair each client with a dedicated client account manager. So you have a one-to-one person and a white glove concierge style service from us that allows you to get comfortable with who's working on your account, as opposed to when you call in some of those larger retirement companies, you're really calling a call center and you have to explain who you are and what you're trying to do every time. You get a lot of comfortability and familiarity with your account manager so that they know how to answer your questions efficiently. They know what type of information you're looking for and what type of feedback that can really help you, as opposed to getting caught in the minutia of just answering the generic answer in many cases. So my agenda for today is that I'm going to cover who can have a self-directed account, how to get these accounts funded and started, and just some basic rules for investing. I'm then going to cover what type of private investments you can make with your self-directed IRA or solo 401k. And then I'm going to jump in specifically to a few private equity strategies, specifically private stock and private placement investments. And then again, I'll cover some questions at the end. If you have questions, please use the questions box to convey them to me. If they relate as I'm presenting, I'll go ahead and answer them in that moment. But if they don't necessarily relate, I'll hold those to the end and try to get through everybody's questions. There's also a copy of today's presentation uploaded in the handout section. That is a PDF copy you can access, and the recording will be posted on our YouTube page, so you can watch this back at your own pace in the future if needed. Everyone that signed up for today's webinar, whether they're here live with us or just signed up and had some other obligations, will be receiving an email with the copy of the video. So who can have a self-directed account? Anybody that has an IRA or a small employer plan can self-direct those types of funds. Most people are familiar with your traditional and your Roth IRA, but we also allow, again, small employer plans. So those for little or no rank and file wage earners or W-2 employees. Those would be your SEP IRA, your simple IRA, and your solo 401k or individual K plan. And you can also actually self-direct health savings accounts if you're someone with a high deductible health policy, and education savings accounts if you've got a young one in your life, you'd like to set aside money for their educational expenses. Those accounts are great because they are very tax friendly and tax sheltered accounts, and the education savings account actually can be passed on to next of kin once the person it's originally set up for is done with all of their educational expenses or reach an age where they're no longer able to utilize the plan. If you've not heard about self-directed investing, that's very common. A lot of your Fiduciary custodians or financial advisors are going to sway you away from self-direction because they prefer to have your money in their hands, where they're charging you a rate and can't really even guarantee a return. They can do their best for you and buy you, but they can't guarantee anything. And with the stock market fluctuation, a lot of people are switching over to self-direction because it puts more control, again, in the power of your own hands to self-direct how you want to invest. Only about 4% of retirement accounts in the US are self-directed currently, and the grand market there is sitting at about $40 trillion roughly. So of the $40 trillion in the US based retirement accounts, only about 4% or roughly 1.5 trillion are actively being self-directed. And that's simply a product of people not knowing that this is an option. And that's why we're here trying to expand information, expand knowledge, and let people take the power into their own hands if it's a good fit for them or not. That's their decision to make. So getting these accounts funded is actually really easy. When you have an existing IRA, you can just move from one IRA custodian to another by what's called a custodian to custodian transfer. That is a non-taxable, non-reportable event. We just receive a transfer form from you that directs us to request for the money to be sent over to us from your current custodian administrator. We submit that over to them. That's usually facilitated within roughly a week's time. Some custodians are fast at getting the money over to us. Some take a little bit longer. We've got a good database and knowledge of many of the custodians in the industry. So as we're working through that process with you, we will set a reasonable expectation for your timeline, depending on who the money's coming from. The other way to get these accounts funded are by rollovers, which is typically when you have a previous employer-sponsored plan or maybe a current employer-sponsored plan that you're eligible to pull money out of by way of what's called a in-service rollover. You initiate a distribution out of your plan, the employer-sponsored plan, and you initiate that to be rolled over into a new qualifying plan. There is tax reporting here, but as long as you're not doing a Roth conversion, basically choosing to pay the taxes on that money in the process, it is a non-taxable event. So it's reported on the way out of one account and on the way into the other account. So it's a completely wash from a tax perspective. Just for those of you that are specifically interested, the distributions are reported on Form 1099-R. The rollover in is reported on Form 5498 to the IRS. One common question I get about contributing into accounts and when accounts start generating returns, does that count towards your contribution limits? And the answer is no. Earnings are completely unlimited. They are completely separate and standalone from contributions and transfers and rollovers. So once you have your funds in a self-direct account, your earnings are not counting against your contribution limits or your rollover totals or anything like that. With your annual contribution, depending on what plan type you have, as long as you have ordinary earned income that you're paying taxes on, you can contribute into an account. For more specific nuances there of what your specific limit is based on your age and the plan you have, feel free to reach out to me directly. You can also just Google search contribution limit, plan type, and there's usually a quick link to the IRS's website that breaks that all down for you. I have that link on my computer anyway, so just email me and I'd be happy to share it with you if you need that information. It's very important with self-direction to invest with people you know. Again, I really want to beat this home. Do your due diligence, build a network in your community, whether that's going to your local investor meetups, joining any other type of groups that you find online, and start building that triad of know, like, trust, so that you don't end up investing with someone you're not familiar with that is not going to do right by the investment you've made. Very quickly, I'm going to go over the rules for self-direction because they're actually pretty easy and quick to explain. When you're looking at a self-directed investment, the asset classes that you cannot invest into are life insurance policies or hard to value collectibles like antiques, fine wine, artwork. Anything that the IRS would consider to be subjective in value is something they do not want you to hold in your retirement account. There are some coins you're allowed to invest into, precious metals specifically, like American Eagle, silver bullion, some non-circulating currency like Iraqi dinar. If you're interested in those asset classes, feel free to reach out or check out our website or our YouTube page. We've got plenty of educational content on those topics specifically. The other way that the IRS kind of oversees these accounts is by limiting certain individuals that you are allowed or not allowed to transact with. Those are called disqualified persons. Any disqualified person to you, you're not allowed to basically do a deal with. So I can't buy an asset from a disqualified person. I can't let a disqualified person utilize an asset that I own in my retirement account. And disqualified persons, I'll cover it on the very next slide. It's very easy to determine who those are for you. The third item here is UBIT and UDFI taxes. These are little known taxes that apply in very certain scenarios when you're either generating not so passive income from the investment you've made. Keep in mind, these retirement accounts are set up for you to generate passive income. So if you make an investment that primarily does generate passive income, but there's a little bit of active income in the situation, then you may need to pay unrelated business income tax. And UDFI, or unrelated debt financed income, is when you make an investment that utilizes leverage. You may be subject to paying the UDFI tax on the portion of the investment that is leveraged or financed. Again, like I said with a previous item there on some other topics, we have educational content specific for UBIT and UDFI. You could check out our website or check out our YouTube page for that specific content, or reach out to me directly. Happy to point you in the right direction. So the disqualified persons are basically your parents, your children, yourself, and your spouse, anyone up and down the big trunk of your family tree. This does not include cousins, aunts, uncles, siblings, but it does include businesses that any of these disqualified persons own or control more than 50% of, or make day-to-day decisions on behalf of. So just applying what I said on the last slide, if my father owns a business, I can't buy an asset in my retirement account from that business or sell it or let him utilize it if it's a piece of property or something like that. Pretty simple to understand, but if you have any questions, please reach out. Happy to clarify for you. So honing in more into today's topic, which is private equity or private placement investing. There are two key components of private equity. The first being private stock. That's any stock offering that you can purchase that is not a publicly traded stock at that point in time. We understand you may purchase a private stock and in the future it goes public. That's something we work with you and sort out when that time comes. But it's very simple. Anything that's currently private, we see a lot of clients invest into small businesses locally, like your coffee shops, breweries, restaurants, as a private investor or private stockholder, and even private banks. Some smaller banks that start up issue certificates of stock and ownership that way. So those are some common ones that I'm familiar with and I've seen a lot of. And then the other option here is syndication or limited partnership or private equity investing. Those are, your multifamily real estate. Some larger group, which is called a general partnership team, puts together a large deal to revamp an apartment building or build an apartment building from scratch, hotels, other types of multifamily units. They put the deal together. They do all of the legwork, if you will, on the deal, and then they raise capital from investors, whether it be their retirement accounts, individuals, types of, venture capital type assets or funds to actually pay for the project that's going on. So you can use your retirement account to be one of those investors as a limited partner, meaning you don't have day-to-day decisions or day-to-day responsibilities. You just put up your money after you've done a full vetting of the investment and believe it's going to work out in, the best case scenario, and wait for the money to start trickling back into your account until a final payoff transaction occurs. The other type of syndication I'm familiar with is in the commercial development space. So that's, a multi-use office building, self-storage, car washes, laundromat. Again, anything that's done through a syndication where a general partnership team's doing all the legwork, your retirement account can invest as a limited partner, meaning you don't have any day-to-day decision-making responsibilities. You're just confident and comfortable in what they say they're going to do with the funds once you remit it to them, and you hold ownership in the deal as a limited partner until it returns disbursements or a final payout item occurs at the end of that life cycle of the investment. So I've got two case studies I'm going to go over today. The first one is just simply investing into a private stock. This is a very simple and easy case study. We've got a investor, David, who has a friend, Sarah, in his local community. Again, Sarah's not a disqualified person, so she's not a child, she's not a parent, she's not a spouse. And Sarah wants to start a coffee shop. So David and Sarah speak. He decides he wants to contribute about $10,000 into this coffee shop business that she's getting off the ground, and they discuss on different structures. In theory, this could be structured as a private loan. There's a few different ways it could be structured, but in this case scenario, they decide to structure it as private stock valued at $1,000 per share. So David effectively is going to take 10 shares of ownership in this coffee shop. Sarah receives much needed capital to get the coffee shop off the ground, and David's retirement account holds the private stock, 10 different shares, worth a percentage of the business. And as the coffee shop grows, the value of those shares are going to grow as well. So that in the future, David either holds a higher valued asset as the coffee shop becomes bigger and has more value within it, and he can sell those shares at any point to a buyer to generate the cash and get cash out of the investment, in turn being able to make other investments in the future. So with this case study, we've got John, who has over $100,000 in a managed IRA with a fiduciary custodian, and he connects with investor Jane, who's on a general partnership team. Maybe she's specifically the investor relations person, maybe he personally knew Jane, and she holds another role in the general partnership team. But regardless, Jane has a deal. She provides John all the information about the deal, which is typically a private placement memorandum. That document is usually going to be upwards of 100 pages. It's going to break down exactly what the deal is, what their expectations and timeline for the project is, the expectations for returns, a lot of specific details that you're going to want to review and do thorough due diligence on before you move forward. So John does that due diligence and he decides he does want to invest. So he opens up a self-direct account, completes that transfer request form I described earlier to get the money moved over from that managed account as a custodian to custodian transfer into his new self-direct account. And when he submits the application and the transfer paperwork, we get working on our end to open the account, get the money moved over, and even start connecting with Jane to get those investment paperwork approved by John and ready to execute the transaction as soon as the account's set up and funded. So what that looks like on the back end is that all of the investment paperwork is filled out in the name of John's retirement account, not John as an individual. The tax ID number for the retirement account is listed where applicable, not John's social security number, so there's no taxable liability in question there. And John does need to approve all this paperwork, typically by signing as read and approved on all the pages. We usually facilitate that through a very simple DocuSign. It takes most investors only a few minutes of their time to do that approval once they've already, again, done the due diligence. And when we have the money in the account, the approved investment paperwork, we'll execute the transaction and send the wire over to Jane's general partnership group. The way these typically work out is there will be like a preferred distribution sent to all subscribers on an annual basis. In this case, I'm using 8%. These are rounded numbers, but I do want to let you know that these numbers are relatively accurate as far as what we see in general situations. May not be exactly to the T, these numbers, but this is a reasonable expectation and a really reasonable scenario here. So 8% preferred distribution to all subscribers, that's $8,000 per year generated by the investment. In the 5th year, the project is refinanced and John's IRA receives a lump sum payout of $130,000. So over the course of having $100,000 invested for 5 years into this syndication, John's IRA earned a total of $40,000 in yearly preferred distributions, plus the $30,000 lump sum additional chunk at the end when the final payout was made. So that really nets $170,000 that this investor could turn around and invest into the next project that they want to. So a few key takeaway points I want everyone to have from this webinar. You can invest how you want, not just how you're told by a financial advisor. They're going to point you in the direction of publicly traded stocks, bonds, mutual funds, assets like that have a little bit more volatility on average than a private asset or private equity investment or self-directing the funds, because you're not doing the due diligence as thoroughly when someone else is your financial advisor. You're resting on them and their licenses, etc., to do good by you. But again, a lot of people are finding that it's more volatile and maybe not yielding the returns that they were expecting or hoping for with their retirement dollars. You can use these assets and these funds and these types of accounts to create legacy while you're generating passive income for generational returns. So what that means really is that there's a sense of legacy involved when you say, oh, I supported this coffee shop get off the ground. I was an investor through my retirement account in this restaurant or in this brewery or in this bank. That's something that you can kind of hang your hat on it and feel proud of as you see these different businesses in your community or different businesses in general take off and grow. And again, you're responsible for all of your own due diligence. So it's always up to you when you're self-directing your retirement account to make sure you're comfortable and you're ready for any possible outcome. If the investment doesn't pan out well, that's between you, your attorney, your CPA, whoever did the due diligence on the deal, not necessarily your retirement account administrator, because we're here simply making sure you're following the IRS's rules and regulations as you're investing how you want to. I hope this has been helpful for everybody. I've referenced a few different times. We do a lot of educational content. We put on events in our local areas that we're located. We have a robust library of our previous recorded educational content on YouTube. So you can go to YouTube and look up Advanta IRA and find all of our historical educational webinars. We bring on a lot of great expert guest speakers with specific areas of expertise. We also have we also have a podcast called the Alternative Investing Advantage Podcast that's hosted by my colleague, Alex Perney. That is a great podcast for people interested in this industry. He brings on expert guests just as well and interviews them. It's a little bit more lenient on speaking about advice and things like that than our educational webinars are, just the way our compliance is. So feel free to check out the Alternative Investing Advantage podcast. And we have a blog as well if you're interested in written format industry standard news, being that this is an election year. We always ramp up some things on the blog as it relates to legislation that are being talked about that may affect the retirement account industry and self-direction specifically. I remember last election cycle, they were trying to take away some of the opportunities with self-directed accounts. And we actually helped start and petition a change.org petition. And realistically, we helped get some of the things that were going to limit the self-directed retirement account space taken out of the legislation in question. So feel free to check all of those out as you see fit. If you are looking to set up a self-direct account, it's really easy and quick. Our application really only takes about 15 minutes to complete. I can help you through a 15-20-minute phone call to go through the application from start to finish. Once you do that, we pair you with a client account manager. We get the account funded, whether it's a cash contribution, a transfer, or a rollover, and then you're usually ready to invest into whatever assets you've either already got on the table or that you're finding as you start to learn more about self-direction, roughly within about a week to a week and a half. I mean, I've seen people get their first investment started on the 7th day after they've opened their account. Sometimes people set the account up and then start doing due diligence. Again, it's all on you as a self-directed investor to find those deals, whether you already have it lined up and need to get an account set up. You want to get an account set up ahead of time so you're ready when the deal comes across your desk, or you are just kind of, again, using this as a diversification tool, keeping some money in the publicly traded sector and in the managed retirement account side of things, and setting some aside to do self-directed investing. Now, if anyone has any specific questions, I'll be happy to go over them through the next few minutes. This was a little bit quicker of a webinar than many that we do, so I always try to be mindful of the audience's time. We book these out for about 1 hour stretches, but some of the content goes a little bit faster, and depending on audience participation, we're here and happy to answer your questions for you. Please, if you had a question and you weren't so comfortable asking it in the public forum, you can reach out to me directly. Just give me a call, shoot me an email. I'll be very happy to answer whatever questions you have about today's topic, or happily point you in the direction of some educational content on any other topic you may have interest in. I hope you all have a wonderful rest of your day.